Are you really in control of your business, or just reacting to problems? A busy workshop in the UAE usually does not fail because technicians lack mechanical skill. It fails because too much of the operation still runs on memory, paper job cards, and phone calls. Work stalls waiting for approvals, parts go missing from the shelf, and finance deals with reporting errors. This chart shows exactly where your margins disappear. Splintering into disconnected WhatsApp messages, paper cards, and spreadsheets hides financial losses inside daily activity. This fragmented routine forces chaotic, after-the-fact corrections just to figure out what happened. Buying random applications to digitize a broken process does not build a scalable workshop. It simply takes physical confusion and turns it into digital confusion. Every growing garage owner eventually faces a strict choice: install a basic standalone workshop app or invest in a fully integrated ERP. A standalone app organizes floor-level tasks and handles your job cards well, but it deliberately walls off that workshop data from the rest of your company. An integrated ERP does the opposite. It connects your reception, spare parts inventory, and technicians directly into a single unified financial workflow. The trade-off is immediate. Standalone apps offer fast setup and instant relief for your mechanics, but an ERP requires rigorous data entry and demands a serious cultural shift from your team starting on day one. This strategic decision determines how you guard your cash flow and monitor the actual health of your business. To see how this plays out, we have to look at the first critical area of workshop management: executing digital job cards and controlling spare parts inventory. In a standalone app, parts tracking often happens separately from your live accounting ledger. That creates a permanent disconnect between what sits on the shelf and what your accountant sees. This matrix shows the alternative. In an ERP, a technician cannot begin work until parts are systematically logged against the job order. You gain continuous, live visibility of profit margins, though floor staff may feel the rigorous approval slows their physical repair speed. If your parts movement isn't tied directly to live financial jobs, your assumed inventory value is fiction, making true profit calculations impossible. The second evaluation vector is how you finalize invoices and link the workshop floor to your financial reporting. Standalone billing relies on manual transfer. Accountants retype labor, parts, and taxes, guaranteeing delayed cycles and costly omissions. With an ERP, billing flows directly and automatically from the completed digital job card. Labor, materials, and taxes move into the final invoice without a single keystroke of manual reentry, but automation demands absolute discipline. Because the systems are linked, careless data entered by a service advisor on the floor immediately and permanently corrupts your core accounting ledger. A scalable garage requires billing to happen as a natural byproduct of workshop operations. It cannot depend on reconstructing the truth from memory at month end. The final and most severe evaluation vector for this region is strict UAE compliance and legal operating requirements. Buying cheap, generic international software forces your finance team to manually calculate and reconcile VAT line by line during tax season. This flowchart illustrates how disconnected floor apps completely isolate your technician labor data from the HR department. That isolation turns the mandatory UAE wage protection system payroll process into a monthly reconciliation nightmare, as staff scramble to match workshop hours to payroll requirements. Single language apps also create daily operational friction. Bilingual Arabic and English capabilities are required for mixed language floor teams to process work quickly and avoid disputes. In the UAE and GCC, picking garage software is primarily a compliance decision. Ignoring localization creates direct audit risks and continuous back-office friction. This scorecard maps exactly how you should evaluate your operation. Your size and goals dictate the correct choice. For a small-scale operator whose only goal is to organize a single repair bay and print neat receipts, a standalone app works. However, the system will break the moment the business expands. If your business operates multiple branches, manages external fleets, or needs to tie daily operations directly to an accountant's dashboard, you must operate within an ERP framework. The benchmark is simple. If you cannot see open jobs, real-time parts consumption, and invoice status on a single screen, your workshop is entirely dependent on individual employees rather than a scalable system. A rigid control system prevents errors before they occur and supports high-level decision-making through real-time data. If you don't have integrated real-time monitoring, you are working blind. Pushing through the initial pain of ERP integration results in protected margins, seamless multi-branch expansion, and the ability to run your garage like a corporate business. Your ultimate goal is total operational visibility that connects your reception desk straight through to your final financial ledger. For a free consultation, contact us today.